Hello, this is Steve Malone with ComSFX. Hope you're doing well today and you're getting some good trades. Today in the news, there's been a lot of talk about the risk-on rally. It's affected the stock markets around the world as well as the commodity markets and currency markets. So what I'd like to do is to discuss what the risk-on rally is and how you as a trader can benefit with the risk-on rally and what you need to be aware of. Some folks think that the risk-on rally is a sign of a trend reversal. Well, that's not the case, because a risk-on rally, especially if it's in a V formation, as we see in the Aussie dollar here, we have this strong rally up and we have this kind of V-type formation. The thing about this isn't a trend reversal, and I'll explain to you why in just a moment. Let's talk about the risk-on rally a little bit in detail. What is the risk-on rally and what causes it? A risk-on rally is simply traders and investors around the world moving out of fixed asset classes like treasuries and bonds around the world, moving out of those and into higher, riskier asset classes, commodities, equities, and currency pairs, especially currencies that pay a higher interest over other currencies. Let's take a quick look at the current interest rates around the world. The Aussie dollar right now is paying a 3.5%. compared to the yen paying at best 0.1% and the dollar paying 0.25%. Now, as the world moves into fixed asset classes, we see currencies like the Aussie, the Kiwi, the CAD, and the Euro sell off and the market move in and buy the dollar. However, knowing that this is a low interest bearing currency, as soon as sentiment in the market has a good feeling about conditions of where the market's going, then institutions and traders around the world will move out of the dollar, basically sell the dollar or sell the yen, and move back into higher, riskier asset classes like the Aussie dollar. The best currency pair to follow related to a risk-on sentiment in the marketplace is to watch the Aussie compared to the yen. And the reason for that is because 3.5% interest rate being paid to an institution holding that position compared to only receiving 0.1%. The differential, less a few fees that an institution has to pay, is about 3.25% in their pocket, or maybe a bit more. So that is why when we get this risk-on sentiment, things seem to go well in the marketplace, then what will happen is we'll see that Aussie yen make a move up, we'll see the Aussie dollar make a move up, the Kiwi dollar make a move up, the dollar CAD will move down because folks are selling the dollar and moving into the CAD. We'll see the CAD yen rise as traders step into the CAD and come out of the yen. So that's the idea behind the currency pairs in the marketplace related to a risk on. Remember this. Risk on is a good sentiment, a good feel about the marketplace, and traders move out of lower interest bearing currency pairs that they're holding for safe haven, and then they will move into the higher interest bearing currency pairs when the risk on, the good sentiment in the marketplace comes about. Now, what do we need to look at in a risk on rally? My suggestion is to look at the average daily range and look at the comparison of the average daily range over a period of time compared to what has just recently taken place. We've had this nice rally to the upside in the last 3 days. We can see here that over the last 20 trading days, we've had an average daily range of about 49 pips. Let's call it 50 pips for ease of numbers. We can see here from low to high, we've gone about 300 pips in the Aussie dollar. So on an average normal basis, we should see about 150 pips here. What do we see? We see twice that much. We see 300 pip move to the upside. Now, look at the bigger picture here. Some might say, well, Dean, this is a short covering rally. And it is. If you take a look at our fib retracement here, we had this long downward move to this point here, and we've rallied up. Get a little risk on rally, also some short cover in the marketplace, because shorts here at some point, we're hitting kind of a bottom scenario here. Shorts are going to step in and take the profits, and 38.2% is a standard profit taking point. But a risk on rally, and something you need to be aware of, is not a trend reversal. In order for a trend reversal to occur, we have to define a bottom in the marketplace. And there's no chart pattern here, in my estimation, of a bottom. We can see this V-type formation Well, let's try to find, is there a chart pattern here? In my opinion, you have a setup for an inverse head and shoulders. Let's take a look. We have a low, a lower low, and now today we've made an inclining neckline. In order for this to be an inverse head and shoulders, what has to happen? The market has to come back some. So if the market comes back and comes back somewhere in this 9750 to 9800 area, somewhere right in this area, it'll create a higher low than this shoulder over here, and there sets the bottom in the marketplace to turn for an upward trend pattern. We see the exact same thing in the Aussie yen. If I step out and take a look at the Aussie yen, you can see the rally up, about a 38.2 retrace, just like in the Aussie dollar. And take a look. In this case, we have the low here, this low over here. We formed more or less a neckline coming across right here. Yet, in order to form a well-defined bottom in the marketplace, to see a trend reversal, we'll need to see this come back and then push up, and now we're into our trend reversal. So in a risk-on rally situation, be prepared as it tries to push higher and reaches confluence of a fib level. Be prepared for it to fall back over, set a bottom, and then push higher. If it doesn't set a bottom here, then look for it to go back down the lowest point, possibly give us a double bottom, and then a push up. However, if it breaks this low point here, closes below that, look for, in the bigger picture, some continuation to the downside. Now take a look at the Euro Yen. I'll wrap up with it. We can see it too has rallied up. So not only is the Aussie involved in on a risk on because it has that higher interest rate, also the Euro dollar, which is only paying 1%, but compared to the yen, there's still a good interest rate differential for the institutions to take. So we get this nice rally up. You can see over the last 20 business days or last 20 trading days, we're about 56 pips per day. But if you take a look here, we have made a move of about 270 pips to the upside. So my thinking is, in this case right here, this in 3 days is about 170 pips or so. We're 100 pips beyond that now. Again, we have a rally of some sort to the upside, a little bit more than a 23.6, a 38.2 in the Euro Yen is going to come in around about the 100 mark. We could possibly see the Euro Yen continue to push up if the Euro dollar, the good sentiment around the Eurozone continues to push up. We might see this move to the upside. Now, in order for this to be a bottom and to turn, I don't see a lower low point over here that we've bounced off of to form a shoulder. So in my estimation, we're going to have to come back, and if we break this low right here, we'll come back down into this area. If this low point right around 97 holds, then we'll work off of that, and what we'll have is an inclining double bottom. If it just comes down to right in this neighborhood, that would be an inclining double bottom, and we can see a push off of that. So folks, that's what a risk-on rally looks like. Oftentimes, a risk-on rally is simply short covering in the marketplace. You get this strong move up to the upside, but just be aware that when you get V shapes due to a risk-on rally and you think the market's going to continue pushing higher, just be aware that in order for the market to turn and get us a trend reversal, we're going to have to form some sort of bottom before we move higher. That's the gotcha when it comes to a risk-on rally. Well, folks, this is Dean Malone with CompassFX. I hope some of the information I've just shared with you about a risk-on rally and what you as a trader need to be aware of will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.